Hello, fellow traders. 'Tis I, the Rumpled One. It is Monday, June the 25th, the year 2018. Let's talk trading. Why you are not getting better at trading, part 18. Well, many traditional trading education talks about having a trading plan. But do you have a systematic plan? Some people, they talk about habits, and I think I've even talked about it. But the thing is, you have to be systematic. You have to have a methodology. It has to have a feedback loop. So in other words, let's say you enter a trade and it goes your way. You exit with a profit. Do you do a debriefing of that trade at the end of the day or maybe immediately? Do you take a look at what you could have done better? In other words, do you have a methodology? Do you have something in place that you do every time that makes sure you focus on improving? Because it's one thing to do something over and over again and consider it practice, but if you're not focused on improving, then you might just be spinning your wheels. I know it sounds obvious because almost anything in hindsight, becomes obvious. But I mean, if you take a hard look at what you do every day, even before you sit down in front of your trading platform, are you doing things that ensure you're focused on improving? Whether it's improving your entry, your money management, your exits, your selection, your timing, you have to focus on improving. Otherwise, you're not going to get better. I mean, when I say it, I have to laugh because it just sounds so obvious. Yet, there's so many people. In fact, probably I would wager most people, they're not focused on improving. They're really not. Not in trading, not in their jobs, not even really in their education. I mean, if you remember when you did homework, you were probably just doing the homework just because you were supposed to, not because you were really trying to learn the lesson. Just be honest with yourself. You don't have to report back to me. But I mean, maybe in some classes you were really interested and you were engaged, in the learning, but the other ones, you probably just skated through. You just did the homework. You were going through the motions. You just memorized something long enough so you could put the right answer on the test, get your grade, and get the heck out of there. I mean, hey, I know I did it in some classes because at the time I could have cared less. But the thing is that habit then carries over into life. I mean, should you care about everything you do? Well, I mean, that's a topic outside of trading. But the question is, when you're looking at trading, you better be sure you care about every facet that you're involved in because your money's on the line. And since your money's on the line, you better be improving your money and risk management. It's simple. This is simple. But are you doing it every time you trade? Is your position size right? Is your stop loss at the right place? Is it employed? Are you managing the risk? Are you taking on more unnecessary risk? Are you in a position where if price moved against you, you could blow your account? Let's see. Let's get the dollar yen back up here. And once again, you can see we're just still stuck in that upper wick zone. We've got 5 trading days, including the day left in the month, so we'll see what happens. And put the dollar yen here. We can see we're in the lower wick zone. They already popped out of it once, popped out of to the upside once, to the downside, and we're hovering. And we still have 2 pairs that haven't filled the gap. Even though I think when we looked, they only missed by points, not even a whole pip. So depending on the platform you and the broker you're using, the gap probably filled. And you can see here on the daily, broke out of yesterday's low. And we've got, let's see, 7 pairs over 100 pips. Nice movement there. EJ, right, sitting at 99. And you can see the buy zone. Take the trigger, hit that pivot. Pivot was taken out. Then you can see we had a reversal here through the short zone. This buy right here probably should have been a scratch. This one probably, since it didn't make a higher high, came back, scratch trade, or you hung in and maybe stopped out here, or if you were really persistent, you hung here, stopped out, reversed, and you should have made your money back. So there you have your buy zone trades. Rat zone. You can see here we put in a bottom. Put in a top, put in a bottom, and it's poked its head out a few times. So green rats are nibbling. And looking at the pivots, once again, we took out that pivot point, reversed all the way down. It looks like we had a monthly pivot right here. There's the monthly open, monthly pivot covered. Once again, daily pivot taken out. Price action, 3 ball, green at the line, green at the line, green at the line, green at the line, green at the line. Okay, 1 ball, red at the line. Simple stuff. H1 candle color at the line. We had a green at the line there, red at the line there. Just using the 5 lines from the previous daily session: high, mid, close, open, and low. I like to call it the wick zone. Price doesn't like staying in the wick zone, as we can see. We see it every day. It's almost like beating a dead horse, but you want to trade something that repeats, and this is a pattern that repeats. Price leaving the wick zone. And we've got the holo zone here. Let's switch back to 15-minute time frame so we can get it all on one chart. We put in a lower open, came back, tested it again, and you see heading to the north. And I just turned on the computer a few minutes ago, and you can see here price went above the ask and has been going the lowest ask price right there. The bid crossed above it. And here we have the inventory reduction bars. A nice trade to the south and another nice trade to the north. We're getting ready to, we hit the M15 inventory reduction bar. And just on the daily, weekly, monthly, open, high, and low, you see here we crossed above, weekly low on the H1, good for 11 pips right there. Once again, just using horizontal lines. No higher math involved, no fancy calculations, and no squiggly lines. And the Einstein, this is when I turn the computer on or open the platform. You can see here we hit the 62, about 2.5 pips away, which is about 2 times the spread. So price has to range. There you go. And once again, these really aren't squiggly lines. These are just marking the previous candles high and low. And I'm looking at it to use very similar to the spread dots, where you can see here price cross is above that previous low. Here we crossed below it and came back above it, and we just see how you can ride it up so long as price isn't breaking out of that previous low. And that's on the 1 minute. We can look at it on the different time frames here. You can see this on the 5 minute. So in this case, where you have a going south, you can see when you can get that changeover. You can almost think of it as making higher highs or lower lows, or is it making higher lows, higher highs? But what I'm looking for is that trading signal where you can see here it crossed above that lowest high, but it didn't cross below the lowest low or the highest low. And you can see right there, it almost signaled a reversal. I'm going to study this a while. It might become a multimeter or it might become some dots. I'm not really sure yet. Like I said, I'm still in the process of studying it. But it is similar to the spread dots. You can see here 185 ticks of selling. And it's moved 3 pips. So one thing about the spread dots, if you get a lot of ticks, but not a lot of price movement, then you can see it must be just stalling. And if you get a few ticks and you get a lot of movement, then you can see it's definitely taking off. Kind of similar to my rocket tank indicator, which I wrote that one. I wrote that before I even knew MT4. I wrote that back in TradeStation days, early 2000s. But you basically put a threshold. If it moves a certain number of pips over a certain amount of time, you get an alert. But fellow traders, just remember, when you practice, you have to focus on improving. Otherwise, you're spinning your wheels. Because in the end, it's not what you trade, it's how you trade it. Go forth and drain the banks.